Any.
So volatile start for the Indian markets. They move off opening lows but also move off morning highs. Key indices trade with a negative bias. IT, autos and consumption hold out. Banks and metals see the deepest cuts. The mid-cap index too sits with a cut of almost 0.2%.
And Titan posts a strong update for the second quarter. Jewelry sales grow 18% on a high base from last year. The company has also added 91 new stores in the past quarter.
Varroc Engineering's lighting business sale deal gets amended. The company will now receive 520 million euros for the business as compared to 600 million euros earlier. The stock down 8%.
Phoenix Mills sees consumption rise to 130% of pre-COVID levels in the second quarter. Kalyan Jewellers' revenue grows 14%, but competitive intensity hits its margins.
From a bunch of small caps, we do have Indian Hume Pipes winning an order worth nearly 194 odd crore rupees. The stock surges over 10%.
Hello and welcome to Chartbusters. I'm Nigel D'Souza and joining me as always is Mangalam Malu. Well, Mangalam, the market's a little bit nervous today. I think the rupee is the sore point in there. The Nifty Bank as well, down close to around 400 points. That broke the 50 DMA and it continues to trade below that level. I'll tell you the big cue for today, if we have to reverse, will be the rupee. If the rupee can drip back towards that 82 odd mark, then maybe we'll see a bit of a relief rally. Otherwise, it appears that around that 17,500 odd, the markets are likely to face quite a bit of resistance. How do you trade from here on, though? We have Shilpa Raut who joins in. Hi, Shilpa. Morning. Well, yesterday it seemed like we were going to go ahead and test that 17,450, 17,500. After the first gap up, we never went anywhere close to that level. How would you trade the index from these levels?
Good morning, Nigel and Mangalam. Like rightly said, 17,400 to 500 was very easily targeted yesterday. But now, even during the rollover analysis, it was very clear that 17,500 will act as a resistance, which is happening now. But support also on immediate basis comes at 17,200. So 17,200, if we hold, then again the rally will resume till 17,500. But below 17,200, we'll see 16,700 zones very easily. Likewise, for Bank Nifty, trading below 38,500 will be crucial. So right now, intraday support should come at 38,500, and from there we should reverse and see levels till 39,500 to 40,000 odd zones.
All right, we take that point on the indices, but as we speak, a lot of these stocks are moving around. We do have Tata Communications, Tata Chem, both of them up around 3% at the high point. But on the other side, JSPL, we have Jubilant Foodworks, Ramco Cement, a bunch of stocks are also lower. So in a market which is as wobbly as this, how do you play? I mean, what longs and what shorts would you have in terms of individual stocks?
Right, likely said, chemical industry since yesterday is seeing some sort of traction. So yes, there is a buying opportunity in that sector. Of course, limited scripts, and likewise metals also yesterday were showing a lot of strength. So we had been seeing JSPL, JSW Steel, be it SAIL, NMDC, every script in that sector was above the crucial resistance zones, and we're good to see again a move up around 10% from here. But yes, today there is some sort of exhaustion, so wait and watch, and a buying recommendation only during the support zones is recommended. So for today, I have a buy in Bajaj Auto. Bajaj Auto is doing extremely well today, and it has a very strong support at 3590 zones for intraday. So it is trading at 3627 now. So one should look for targets of 3680 to 3720 zones with a stop loss of 3590 for the day. And I also have a buy call on Manappuram. Manappuram is taking support at 99 to 100 zones. So a stop loss of 99, and it is trading at 100.85 now. So you should look for targets of 103 to 105.
Okay, all right. Shilpa, thanks so much for stopping by and filling us in on your call on the index as well as a couple of those trading strategies. For the time being, let's shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Nandish Shah of moneycontrol.com is tracking a stock that he wants to tell us about. Nandish?
Today's ideas for profit is Kirloskar Ferro Industries. KFIL is one of India's largest castings and foundry grade pig iron manufacturer with a market share of 20% and 40% respectively. K-File is in the process of increasing its pig iron capacity from 5.5 lakh tons to 8 lakh tons and castings capacity from 1.5 lakh tons to 2 lakh tons, which will help in maintaining its leadership position. On the back of cost-saving initiatives, it is in the process of setting up of additional 2 lakh tons of coke oven plant along with 20 megawatt of waste heat recovery power plant. This capex is likely to be commissioned by January 2023. Further, KFIL has won 2 iron ore mines under the auction route. The company remains hopeful of commencing iron ore mining operations post the final approval from the Forest Department. Both mines put together will lead to almost 35 to 40% of the requirement for iron ore. Courtesy the various cost-saving initiatives, KFIL is likely to save around 125 to 150 crores for FY23 and 250 to 300 crores in FY24. It has acquired 51% stake in ISMT, which is a forward integration steps. KFIL has undertaken various steps to reduce the power cost along with the restoration of banking facilities. We remain positive on KFIL given the various cost-saving initiatives, organic expansion, forward integration with ISMT, and a favorable CV cycle. Based on our projection, it is currently trading at a EV to EBITDA of 5 times FY24 earnings.
Right, weakness in the rupee doing well for a lot of these exporters. We have Himmat Seed, which is up almost 11%. A lot of the other textile group stocks are also doing well. Jindal Worldwide, for instance, is up almost 8% from the lows. Weakness in the rupee is what we're seeing, and a concomitant impact on Himmat Seed as well as Jindal Worldwide. For Himmat Seed, remember, 80% of their revenues do come in from exports itself. We take a short break, come back, get you more on the individual stocks as well as the market.
Do we have to wait years for a cure?
Hey, Mommy, can we go make some pancakes?
Yeah, let's go. Or are we smarter than that?
There's more of us in the squad today. There's a young one in the crew. There's a big boy in the gang. There's more color in the tribe. More styles in the wardrobe. We may look mean, but we're still the safest guys to be with. There's more punch, more legacy, more wow in us today. The original rock stars are rock stars still. But there's one thing we will be today and every day. New, now and forever. Tata Motors, new forever.
Sir, the prices of the raw materials keep fluctuating. It is quite risky for us to estimate the value of such a huge order. We are a small business. Lost this order.
Don't worry. Buy commodity futures contracts. Hedge the risk on raw materials and reduce the risk of increasing prices. When the contract ends, you get the delivery of raw materials from the exchange. In case a need arises before that, then you can square up the contract and get instant delivery.
Let me speak to the client right away and finalize the deal. And hedge my position too.
Welcome back. Amidst the weakness in the market, a couple of stocks are actually doing well. Let's begin with the top Nifty Gainer today, and top Nifty Gainer by a mile. We have Titan, which is up almost 4%, though off highs. along with the market, but still sitting with a gain of 4% odd. And there are a couple of reasons for that. The biggest reason, of course, is the way the company's second quarter business has performed. The overall sales grew by about 18%, but the mainstay of the company's business is the jewelry vertical, which grew around 18% on a high base. Same time last year, remember, the jewelry business grew at around 66% odd. So if you just take a look at the 2-year compounding growth, it is over 40% odd, and that is something that the street likes. Importantly, the gold jewelry, which is plain gold low margin business, clocked in low double-digit growth, which is lower than the overall growth, and studded sales actually grew higher than the overall division. What this did is improve their product mix, and perhaps we will see improved margins on account of that as well. They're still below pre-COVID level, but they're better than same time last year. They have an optimistic outlook for the festive season. Remember, the second quarter had a lean period. There was Shraddh, etc. as well. But now with Navratri and Diwali coming in with the wedding season, the third quarter looks strong, and that is why the company has added 25 jewelry stores, 91 total stores, and the other verticals of the company are now firing as well. Watches grew about 20% odd. Eye care optically grew by about 7% odd, but remember, the retail sales have been much faster, so there was some element of inventory destocking out there. So going forward, restocking would improve their eye care business as well. Carrot Lane, which is online sales of jewelry, grew by around 56%, and all the other businesses that the company seeded has done well as well, and that explains why the stock is higher.
All right, Mangalam, by the way, we have a news flash that's down for you on the screen. That's the Bloomberg Wires flash. Credit Suisse, they've offered to buy back debt securities up to nearly around $3 billion. So, trying to give a bit of a vote of confidence out there. It's still an evolving situation, but we need to see how that one does play out. But coming back home then, Mangalam, we told us about Titan, sparkling, so to call it, or shining. But Dabur, a bit of a dampener. Stock has been underperforming as well, though the second half of the year could look up, right?
The second half of the year could look up for all the other FMCG stocks as well, because that's what the thesis of FMCG investing in this year has been. But the reason why Dabur is underperforming in today's trading session is because of their update that has come in. 4 to 5% sort of growth, mid-single digits, so to say, as far as their revenue is concerned on a consolidated basis, and that would be led by India business, which is about 70% of their overall business, growing in mid-single digits as well. But internals for Dabur aren't as bad, because on a base of 43%, the foods business has actually grown in double digits. Secondly, on a base of 17%, their home and personal care business as well has grown at around mid-single digit odd. The reason why the portfolio has been impacted are two. One is their healthcare business saw a muted quarter, perhaps a bit of a decline this time around. That is on account of a high base same time last year because of COVID. 3-year CAGR has been high double digits out there as well. And the second part is, while the international part of the business actually on a constant currency basis did well, the translation losses would be much more because of the depreciation that we've seen in the Turkish as well as the Egyptian currencies. The margins, while they would improve quarter on quarter, there would be a decline by about 150 to 200 basis points year on year, and the management has guided for a strong second half as well. So let's see where we go from here. The stock, of course, was underperforming in the last 5 sessions. Yesterday as well closed at the lower point of trade, and today as we speak opened muted and then has moved to the low point of trade.
Okay, all right. Mangalam, well, let's hop across to Sonal. She's standing by to tell us about Phoenix Mills. Well, it's trading with a cut of 1.5% or thereabouts. The quarter two consumption, though, at around 130% of pre-COVID. Well, Sonal, those numbers look pretty good, isn't it?
They are. Looks like you're going to the mall and buying a lot of jewelry, Nigel, or maybe Navneet is doing that. But as far as the quarter two numbers for Phoenix Mills are concerned, a strong set actually. 130%, as you mentioned, the consumption in quarter two of FY23, which compares with quarter two of FY20, which is the pre-COVID level. It's a good showing out there. Total consumption, however, on a quarter-on-quarter basis was flat at 2,200 crore rupees, but that number is much better than what was expected. Revenue per available room, it has been increasing over last couple of months. In the month of September, it was at 11,242, which compares with 8,900 just that was seen in July itself. In terms of occupancy as well in their hotels, it has been continuously increasing, averaging around that 86% mark. So good going as far as revenues are concerned, consumption overall, but the stock has come in for some profit taking, but has been doing well in last couple of days.
Well, Sonal, priorities change with time, and that's what's happened with me as well. No staycation, so I can't contribute to the St. Regis's, and also shopping, it's relatively low. I think it goes now more focus on the small caps. You guys will learn in the course of time. Thanks so much. Well, let's hop across to Abhishek. He's standing by to tell us about Equitas Small Finance Bank. It's clocking in gains with offer nearly around 2%. Abhishek, run us through the update that came in there.
Well, the business momentum is as steady as it could get, given the fact that even in the previous quarter, they had a similar run rate in terms of business momentum on a YOY or quarter-on-quarter basis. They have lost out on CASA ratio, but they have made up the liquidity in the balance sheet with term deposits and bulk deposits. So to begin with, deposit momentum remains strong at 20.1% YOY and about 6.6% sequentially. The loan growth momentum remained healthy at 20.2% YOY and close to 5.1% on a sequential basis. CASA ratio has declined nearly by 350 to 360 basis points on a sequential basis, but remains strong at 48.1%. The retail term deposit, that's up 8.2% quarter-on-quarter, and the bulk deposits are up nearly 31% on a sequential basis. Now, despite the rise in the high interest rate deposit momentum, the overall cost of deposits have moved in only by 5 basis points on a sequential basis. Back to you.
Abhishek, thanks a lot for that. A whole host of stocks also in focus on account of MSCI's November 2022 semi-annual index review. It will be announced on the 10th of November. Vivek joins in with the details of what's expected. Vivek.
Well, that's right. So 10th of November is the date, that'll be quite important for a whole host of stocks. November 30th is when the actual adjustments will come into effect. So now what we are looking at is, and we've taken a list of estimates from IIFL Alternative Research, whole host of stocks, that are likely inclusions in this particular index review. Tube Investments, Indian Hotels, Ashok Leyland, TVS Motor, Schaeffler India and Astral. All of these are stocks, that are likely to move up from the MSCI small cap index to the MSCI standard index. Remember, the MSCI standard index is the one that is more widely tracked and that typically has a higher flow impact as far as the stock price is concerned. On the other hand, some of the other stocks to keep an eye out for: Hindustan Aeronauticals, ABB India, Warren Beverages and Bajaj Holdings. These are the other stocks on the list as far as IIFL Alternate Research is concerned that are likely to make the cut in this particular index review. Now, when you're talking about some of the likely exclusions, IGL and Biocon are likely to be excluded from the MSCI standard index. Now, the other index that we are looking at is the MSCI small cap index, and some of the likely exclusions that are expected to have a relatively higher impact are Vedant Fashions, Metro Brands, Sansera Engineering, LG Equipment, Escorts Kubota, as well as Campus Activewear. And likely exclusions, which are standalone exclusions from the small cap, are SpiceJet, Gujarat Fluoro and Kaveri Seeds. Important to track the price movements of these stocks from now till November 10th as well, in order to ensure that they get the final cutoff, or they make the final cutoff for the inclusions.
Okay, all right. Thanks a lot for that, Vivek, for joining in and filling us in with that quick take. By the way, the markets, any kind of bounce is getting sold into. And you have Grasim that's moved to the low point of the day. Tech Mahindra as well is selling off a little bit. And Ultratech Cement as well. That's another one that's moved a little bit lower. Slip into a short break, come back, continue our focus on markets and stock-specific action.
Electronics Mart India Limited, one of the fastest growing consumer durable and electronics retailers in India, launches an initial public offer of equity shares of rupees 10 each. The 100% book build issue is being offered in the price band of rupees 56 to rupees 59 per equity share. Bid issue opens on Tuesday, October 4th, 2022 and closes on Friday, October 7th, 2022. For risk factors and more details, refer to the RHP available on the website of SEBI, the book running lead managers and the stock exchanges.
They have a monumental journey ahead of them, through wind and rain, from one continent to the next, although some have other ideas. Well, if you're going to fly, you may as well fly better.
Hey, Dad, are we there yet?
You guy, eh? Yeah. You bought your car insurance from Acquire, right?
Acquire?
No?
No.
It's okay, Murthy. Mistakes happen. No need to check. No, Murthy! No need to check. Murthy, don't think. Murthy, no need to see that.
Before buying a new car, check Acco Insurance Company and save up to $45,000.
Can someone working alone solve all the world's biggest challenges? Isn't collaboration the way we'll produce enough food for a growing population? and supply tomorrow's mega cities with clean water. Isn't working together how we'll make lighter, more sustainable packaging and generate limitless energy? As one of the world's leading chemical companies, we believe the chemistry between people is the chemistry that matters. SABIC.
आग को फैलने से रोकना मुश्किल है, पर नामुमकिन नहीं। अब फायरवॉल टेक्नोलॉजी के साथ सेंचुरी प्लाई क्लब प्राइम आग से बचाए।
आपका नाम है? हाँ जी। हाँ जी। कैनेरा AI1 बैंकिंग सुपर ऐप यूज किया है? हाँ जी। IPO के लिए अप्लाई कर सकते हैं? हाँ जी। फास्ट टैग, मोबाइल रिचार्ज, कार बुकिंग? हाँ जी। हाँ जी। हाँ जी। इस ऐप में रंग बदल सकते हैं? हाँ जी। क्या आप रंग बदल रहे हैं? हाँ जी।
Canara Bank presents AI1, the all-in-one banking super app loaded with over 250 features for all your banking needs and more. आपके सपने हमारे अपने।
क्या ये सच बोल रहा है?
हाँ जी।
Well, the markets are under pressure, but Virok Engineering, well, they are. It's under more pressure actually because they've closed out the deal that they had announced a few months ago. However, at a lower than expected valuation. Sonia joins us to run us through what does it mean for the company going forward. Sonia.
So the four-wheeler lighting business was under a lot of pressure for the last couple of years, and in the month of May, Varroc Engineering sold the four-wheeler lighting business at a price of 600 million euros. At that time, there was a relief on the stock because the company had told exchanges as well as investors that with this deal closure, they will become debt-free. But now this morning, Varroc came out with a press release where they said that the deal value has now been amended. In fact, now they will receive just 520 million euros versus the 600 million euros that was earlier penciled in. Also, there will be a 51 million euro compensation payment for the IPR infringement litigation conference, and hence that will be an additional burden for them. This also is a setback for their debt reduction plans. So earlier they had said they would be debt free, but now it seems like they will continue to have debt on their books, and the net cash may not be 200 crores as per what they had estimated earlier. There is a conference call that will take place at 12 p.m. so more details expected there. But for the time being, the stock is under pressure because of the disappointment that the deal value has been brought down, and there is an infringement payment that they have to make as well. Back to you.
Take that point. The street does not like that uncertainty out here. All eyes will be on the 12 p.m. conference call that the management will hold, 8% lower on that counter. With that, we're out of time on this edition of Chartbusters. You stay tuned.
Brought to you by Buy, Sell or Upgrade Your Car with Spinny.
Electronics Mart India Limited, one of the fastest growing consumer durable and electronics retailers in India, launches an initial public offer of equity shares of rupees 10 each. The 100% book build issue is being offered in the price band of rupees 56 to rupees 59 per equity share. Bid issue opens on Tuesday, October 4th, 2022 and closes on Friday, October 7th, 2022. For risk factors and more details, refer to the RHP available on the website of SEBI, the book running lead managers and the stock exchanges.
Hurry, hurry.
Will snow days be a thing of the past? Or are we smarter than that?